far as our covered market is concerned, that has been growing 10% against the IPM of 8%. So our therapies where we have been available is growing little better than the industry. Hence, we have been growing. Acquisition is, we have always gone for a right acquisition in terms of, fulfilling the gap in our own portfolio, or with the acquisition, we can start a new therapies. In licensing and acquisition is one of the strategies. In last few years, we have done acquisition from Glaxo, Sanofi, Abbott, and Bayer. So I've been fortunate to have brands, and we have tried to make them in the revenue doubled or tripled. And as far as gross margin correction, we have done about 800 to 1300 basis point as far as gross margin correction is concerned.
Right. The successful integration of the acquired brands like Myrel has been a key driver for growth for the company. What is the current acquisition and in-licensing pipeline, if you could help us with that as well?
So I can't tell anything for the future, but as of now, we don't have anything in the pipeline. We've already been informed in the RHP document, whatever acquisition we have been done, but we are quite bullish on it. Today we are in these 4 therapies majorly, and we want to go ahead in spine, rheumatology, gastroenterology, neuropsychiatry, dermatology, and infertility. So we are bullish on these therapies if we get a brand or to fulfill a gap in the current therapies. We are open for in-licensing and acquisition.
In that, if you just have to look at the export picture, what would be the contribution be currently, and what's the strategy ahead for this particular segment?
So we have about 3.5% plus international business, and about 96.5% is India business. So we are basically an India-based, India-focused pharmaceutical company. As far as international is concerned, we already have our associate company is La Chandra Pharma Lab, which is a hormonal API company, and we already established a female hormonal formulation block, which is going to start in another 2-3 quarters. And we have a ambitious plan on B2B with the female hormonal to have a piggy bank, and then with the other brand. But if you look at Corona Remedies today's portfolio and the futuristic thing, in next few years, about 3-4 years, the contribution index of international business will increase, but that will be in a higher single digit as far as CI is concerned, and the rest is India business. So we are highly been focused and dependent on the India business as far as today and next 2-3 years is concerned.
Right. Sticking with the India business, if you look at 70% of the domestic sales come from 27 brands, I believe, and one of them contributes more than 1,000 crore to your top line. So going forward, what is your strategy to reduce the dependence on one single brand?
No, so I think so. You read the little long number. It's been 100 crore. It's not 1,000 crore. So our number one brand is B29, which has crossed about 100 crore. And how these 27 brands have been there? We have about 9 different divisions: 3 in women's healthcare, 3 in cardiometabolic, 1 in urology, and 2 in multispecialty. Each division has 3 engine/focus brand, and rest 3 is about important brand. So 9 3s are 27. We have 27 well across our engine brand, and we would like to piggyback on them because each brand has a potential to become 100-200 crore kitty into the coming days or coming years. So we are focusing on 27 brand, which is well diversified across urology, pain management, cardiometabolic, and women's healthcare.
Okay, well, thank you so much, Mr. Mehta, for taking out the time and speaking to NDTV Profit. So that's the new IPO that we are looking at on the street, with the subscription date opening from today. But it's time that we slip into a short break. More stock queries will be on the other side, so do stay tuned in.
Has weakened past 90 rupees per dollar. What is the RBI has to say about the rupee under the current context?
We are trading above 90. Our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit.
Hi, welcome back. You're watching Ask Profit right here on NDTV Profit. I'm Anushri Vakharia and with me is Somit Sarkar. Before we start with the stock queries of the days, by the way, you can call us or even WhatsApp us on the numbers that are flashing on the screen. Let me just take a quick check at what's happening with the markets. So in terms of where the Nifty 50 is, we are seeing some of that pressure today. 0.4% is the kind of downtick that we're looking at. The Nifty is somewhere near the day's low is what we are seeing. In terms of bank Nifty also, even that's not doing so well. We are seeing some bit of pressure. That also 0.4% of a decline is what we are looking for bank Nifty as well. While if you look at the broader markets, they are in fact underperforming where the benchmark indices are also concerned. In terms of the sectoral heat map also, if we just pull that one out, we are seeing Nifty IT only doing relatively better. Otherwise, all the sectors are in red today. So that's the kind of breadth that we are looking towards the markets right now. But with that, let me go to the first query of the day. And that's Mohit, who's writing to us from Ludhiana. He's got about 1,000 shares of IDFC First Bank at 26.94 per share. He's looking at a time horizon for 2 years. So we'll take a fundamental view for that. So with that, let me just welcome the guest for today. It's Lancelot Dicona, CIO of ValueX Wealth Connect, joining us. Along with that, we have Kunal Rambia, fund manager and trading strategist of the streets. Hello, and thank you so much for taking out the time. So Lancelot, coming to you first of all on IDFC First Bank, what would your view be with this counter?
I think given that, we have seen easing up of rates over the last 1 year, and going forward, RBI expects that transmission of rates should transform to the banks. So you are going to see a good amount of credit flow into the banking system and from the banking system to various borrowers. So given that, IDFC First Bank is primarily focused as a retail bank, you will see good amount of growth coming in from the retail side. Their NPAs have been fairly muted over the past couple of quarters, and we expect that NPAs would remain, relatively lower on the lower side. So from a quality aspect, yes, you are seeing good growth, and I think the bank is poised to do better. So even the stock should give you better returns going forward.
The next is a caller query from Sanjay from New Delhi. It's on SVN. Sanjay, you can go ahead and ask your query.
Yeah, morning. My question is on SJVN. I am having 1,000 shares at the rate of 83 rupees. Now today it is somewhere around 72. I don't know what to do. Kindly help me out.
Kunal, any short-term view on SJVN 1,000 shares Sanjay has bought at a price of 83?
Good morning, Somit. So if you look at the overall formation on the chart, this counter is clearly in downtrend since 2024 after making the high of 160. Even at 72, I don't foresee any near-term support coming on charts. So it's, just as soon as possible, take an exit from this counter, though it looks oversold. But rather than catching the falling knife, move on to something where the momentum is already picking up.
Okay, so that's with regards to SJVN as what we are seeing. Next query is from Shrikant, who's writing to us from Bengaluru. He wants a review on Shakti pumps and wants to understand whether it's the right time to enter in this one, considering that, FIs and DIs both have been increasing their stake since the last shareholding pattern that we've looked at. So, Kunal, firstly, let me come to you on this particular counter. There's been a subsequent correction in this last year-to-date period. If you just look at that, what is your view with this?
See, this counter is as of now trading near to 1.5-year low. In fact, from the highs, it has corrected significantly. But even if you look at last 6 to 7 days, not even a single day was positive, and it's a linear decline itself. Again, as I mentioned to the previous viewer, same goes here. Rather than catching the falling knife, just stay out of such counters. If there is a consolidation, if the stake increases and we see some kind of volume activity and some kind of higher top, higher bottom formation, we'll reinitiate the buy. But for this, at this level, I will not really advise to buy this counter.
Next query is from Chandan Jain from Karnataka. It's on NCC. He's holding 1,000 shares of NCC, bought at a price of 250, and currently the share prices are at 52-week low. Should he hold further or book losses? Lancelot, any view on NCC here?
See, if you look at NCC, it trades at almost 13 times its earnings, and we have not seen, revenue growth in the last quarter, and that has been a bit of a dampener on the stock. It's also return on equity has been very low over the last year because the margins have got impacted and the cost of borrowing has been high for this company. So that is impacting its profitability as well. So given that, unless the outlook changes dramatically for the company, I think one should just stay away from this company or exit it if you are already invested in the stock.
Okay, so that's the view that we are seeing for NCC. In fact, if you just look at the next caller's query, we have a similar query that we are looking at. It's Manish who's calling to us from Mumbai. Hi, Manish, how can we help you? Lancelot was just speaking about NCC. I hope that might have eased some of that query that you had. But apart from that, you have any other stock-related query as well, right?
I was telling that should I go for Electro Steel Cast or NCC? Both are at 52-week low.
Okay. Let me take this to Lancelot then. So, we are seeing he has a divide between either of these stocks that he wants to enter. So, what would your view be?
Well, if you have to choose between these two stocks, Electrocast is a better, Castings is a better option because it has an EBITDA margin of about 40%. It's, trading at a price to earnings ratio of 8 times earnings. And we have seen, there has been some amount of revenue growth as well. However, profitability has been declining over the last couple of quarters. And that could be probably to, difficult market conditions as well as, steel prices going up. So I think if one has to choose between the two, then electro steel castings would be a better option. But otherwise, if one has to choose other options, maybe better look at, completely different options altogether.
The next query is from Shankar from Delhi and it's on Indigo. Yes, Indigo has been under a lot of pressure. In fact, in the last 6 sessions, if you look at the stock is down nearly 13% on the back of massive cancellations that the company has reported due to pilot shortages. But given this sharp fall in the share prices, Shankar wants to know whether is it a good time to buy this counter from short-term perspective. Lancelot, firstly coming to you on the fundamental view, would you like to buy Indigo at this value or would you avoid given the fact that there is a lot of negative news flows coming in for this counter?
I think, apart from the negative news flows, if you look at the earnings over the last 2 quarters, despite growth in revenue, profit has been under severe pressure. Profit growth has been under severe pressure. Even at this current levels, the stock trades at about 38 times its earnings, which is quite expensive. So I would suggest that it's better to stay away from the counter, especially when the valuation is expensive. And you can always wait for a price correction and look at investing when the price multiples are a little lower.
Kunal, what would be that support level for Indigo after this sharp 13% fall that we have seen?
See, Somit, somewhere in the month of March, we saw the first breakout, and that breakout was at around 5,000, and the counter went up to 6,250 kind of levels. From those elevated levels, now the counter has come back to the same level where we saw the breakout. That's at 5,000. I mean, just have to wait for a couple of more days to see whether counter holds this level, 16% down from the high. I think this looks a good level to think of initiating a buy. The condition of buying will be whether it holds this 5,000 mark. So yes, if the counter holds 5,000, it can be a good short-term momentum-based trade, and which is under the chaos. So yes, with the stop of 4950, one can then initiate a buy, but wait for a couple of days to settle, for the price to settle.
Okay, so that's with regards to Interglobe Aviation that we are looking at. The stock has been under pressure on account of these flight cancellations that we're seeing. But moving on, it's Mohan who's calling to us from Bengaluru. Hi Mohan, how can we help you today?
Good morning. I just want to know, can I buy this SKF shares? This SKF shares has been split into SKF Industrial and SKF. Can I invest for this on this both this for long-term perspective?
Any particular reason that you're bullish about this particular stock?
This company has got very good EBITDA margin and long-term perspective looks to be anything. So I saw ROC and everything looks to be very good. So I just wanted to know whether can I invest on this share.
Okay.
Because it is split into two, SKF India and SKF Industrial it is become now two.
Okay, let me take this across to Lancelot then. Lancelot, your view with SKF India, would you recommend a buy at current levels?
So if you look at the stock, post the demerger, it has a market cap of about 9,100 crores. And based on the demerged portion, this particular SKF India actually has the automotive manufacturing business. And you are seeing the reasonable growth in the automotive sector, which will drive the demand for, automotive bearings as well. So given that it's, it has been able to generate healthy ROEs in the past, I think this should be a fair level to buy the stock and maybe invest for the long term. The other is SKF Industrial. I think SKF Industrials would see probably much higher growth because over the last couple of years, we haven't seen much growth in the industrial space. But given that the economy is now starting to pick up and we're seeing GDP growth come back in, you could see significant growth coming into the industrial, and probably valuation wise, that was a little better than SKF India.
Before moving on to the next query, let's get in Sharat to give us some details on what's been happening when it comes to the BSE F&O market setup.
Somit, basically looking at the choppy market setup in the month of the starting time, and largely we are seeing some selling happening, but not major selling happening, but the defense names and certain names, of course, in the financial space, that's taking a beating. IT space is the only one where we are seeing a green coming in, supported mildly by ICICI Bank and Reliance. But net, a very small range is something which a Sensex is actually featuring in, and it's down almost 0.3%, coming in at 85 or 400 odd levels. Largely, there is a mix and match happening when it comes to both the call and the put options writing. And BankX also, there is a drag coming in and no major support coming in from most of its larger constituents as well. If you can just point out HDFC Bank, ICICI Bank, none of them actually supporting the up move coming in. It's stock specific, there are news flows happening, key longs developing in BSE and Nuvama. While you're looking at the short covering candidates, they include M&M Financial and ICICI Pru. Also, long unwinding, Keynes Tech and Samman Capital are there. And lastly, I would like to point out the short build-up happening in Interglobe Aviation and then from defense space, BEL as well. So stock-specific movements are happening and largely the volumes are drying up in the initial part of the day's trade.
Thank you, Sharath, for that F&O setup. Next is a caller query coming in from Kiran from Hyderabad on Eternal, that is Zomato. Kiran, you can go ahead and ask your query.
Yeah, sir. I'm holding 800 Eternal shares at 317. Shall I hold for the short term or shall I book losses, sir?
Kunal, Kiran is holding 800 shares of Eternal, bought at a price of 317. Current market price is below 290. What should he do? Should he continue to hold or sell?
So now specifically on 22nd July, this counter had a massive gap up, and that gap up was right from 285 levels itself, and then it went up to 360 levels. Right now, the counter has reached the same level, though the present trend is negative. But because the viewer is holding it for since a long time, it's near to the support now. So if the counter manages to hold this 285, 290 zone decisively for next 2 to 3 days, I think then we can have a ray of hope for the reversal. If the counter breaks 285 on the lower side, I think then one should take an exit for now.
Okay, so the next stock that we are going to be talking about is Devyani International, and that's the query that Venkat has for us. Hi, Venkat, how can we help you with this?
Hi, good morning to everyone.
Good morning.
So, I am planning to buy now Devyani International. So, it's beaten down now. And also, I heard that there is a merger with Sapphire Foods. So, any one only will be in the market, I think. So, which one to buy now? Either Sapphire or Devyani? And is it right time for the Devyani to buy?
Let me take this with Lancelot. Lancelot, so if you are seeing that he is looking at the QSR space and Devyani Inspire in particular with the merger which is in place. So of the two, if he wants to gain out of this deal that we are looking at, which one would be beneficial for him, and how do you view this space as?
So I think what I see at the moment is that the proposed ratios that are coming, the swap ratios rebate are the key areas. If it is coming in at 1-to-3 ratio, then probably it will be better to buy Devyani. In terms of the overall structure, I think when Sapphire gets merged into Devyani, they are expected to remain. It should be a much bigger entity and should benefit from the profitability. Presently, Devyani has seen a little bit of pressure over the last year, but that was probably because of inflation as well as slowdown in the economy. Now that we are behind that, we should see good growth going forward. And it still maintains a relatively low debt to equity. So there's a lot of operating leverage that would be gained from this company, especially post the merger. So I think one can look at, maybe buying into Devyani at this point in time, or maybe wait for the merger to go through. And if the price does correct, then you can always add further at that level.
Okay, so that's with Devyani International and Sapphire Foods. That's a view coming for those two counters. But next question is from Narishma Reddy, and she wants to know about Grow, whether it's a good long-term investment that we are seeing. She holds 150 shares at 100. Lancelot, what would your view be?
So I think, see, while Grow has a good long-term business model, it is better to book your profits at this point in time, because these kind of high multiples will correct over a period of time, as the business also stabilizes. And we have seen that, the market pricing itself of Grow had been relatively on the higher side. So valuations are stretched, better to book profits, and I'm sure you will get an opportunity to enter the stock at lower levels later on.
Well, starting off with our first rapid fire segment, Lancelot, Kunal would request you to keep your answers short. The first one is from Vinita Adhikari from Nainital. She holds 500 shares of Cupid, and he wants to know whether should he buy more shares at the current level or exit. Lancelot, any view here?
I would look at exiting at this level.
Okay, Swami holds 30 shares of Fortis Healthcare at a price of 941. Wants to understand the fundamental view on this. So what's your view, Lancelot?
So I think as far as the the industry is concerned, yes, the industry is looking good. But however, of late we have seen some operational issues at Fortis, because of which we have not been able to generate higher operating gains. One can exit.
Sadanand from Goa wants to know whether is it a right time to enter Canes. Kunal, technically, does Cane look good?
I think we'll have to wait for more consolidation to happen. Avoid for now.
Okay, Venkatram wants to know about M&M Finance for a 6-month, whether he should enter at the current levels. Kunal, your view?
Absolutely. Trending counter, keep the support level of 314 in mind, and one can initiate a buy.
Shrikant from Hyderabad is holding few shares of Tata Capital, bought at a price of 326. He wants to know the short-term outlook. Kunal, what's your view when it comes to Tata Capital?
Absolutely sideways, strong support at 320, one can hold for now.
Lancelot, Krishnamurthy is holding 40 shares of Motilal Oswal Securities at an average price of 565. Wants to understand whether he should book profits at current levels. Your view?
I think you can book profits even at the current levels.
Chris from Bangalore wants to invest in BSC and Oriana Power. Lancelot, should he invest at current valuations?
Yes, I think one can really invest.
Okay, Surya Prakash holds 50 shares of HAL at 4,750. Whether he should hold or sell is the query. Kunal, your view?
It's near to the support of 4,300, hold for now.
Raj from Bangalore holds 34 shares of Trans Rail. It was allotted during IPO at an average price of 432. He wants to know whether should he continue to hold. Lancelot, your view?
I think you should book profits and exit.
Rajesh holds 500 shares of Godrej Properties at 1100 for a short-term basis. He wants to have a view on this, whether he should continue to hold. Kunal, your view?
Supported 1950, I think that's the level to initiate the buy.
Jakulvar Shrikant holds around 1000 shares of Apollo Microsystems bought at a price of 290. He wants to know whether should he average at current levels or sell. Lancelot?
I think you can average.
Sunil Jakar holds 100 shares of Bharat Seeds at the price of 230. Wants to know whether he should average or book losses. Kunal, your view?
It's a downtrend counter hold for now with the support of 160.
Last query on rapid fire from Srinivas. 100 shares of Geo Finance bought at a price of 350. Is there any chance of upward movement, Lancelot?
I would think not at the moment.
Well, that's the end of our first round of rapid fire. With that, let's slip into a short break and we'll address more of your queries post that.
Has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
We are trading above 90. Our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities.
Well, let's welcome in our new technical guest for the second segment, that is Ajit Mishra, SVP Research from Religare Broking. Starting off with the first query, it's from Murthy from Karnataka. He's holding 350 shares of NTPC Green Energy bought at a price of 106. He wants to know whether should he hold or sell or add more. Right. Lancelot, any view here?
So I think, the stock has corrected and it's trading at reasonable, price to equity. It's about 100 times. So one can definitely look at adding maybe even at this levels from a long-term perspective. In the short term, maybe you could see some corrections, but over a period of time should generate good returns.
The next query is from Pooja from Pune. She wants to know the technical and the fundamental view on Kane stake. Basically, she wants to know whether the share prices will bottom out here or could fall more from the current levels. Lancelot, your view on Keynes?
So my view is that, you see the company has had a serious issue regarding corporate governance. and this puts in question mark its entire numbers and projections, etc. So until we are satisfied that adequate care is being taken to the disclosure of the numbers, one should stay away from this counter.
Okay. And Ajit, what's your technical view when it comes to Keynes Tech?
So I second basically what he has shared, because when it comes to certain news-driven events, we usually see that support hardly works. Though last time when Keynes was retracing from its record high, a zone closer to around 3800 mark was the zone where it took support and rebounded smartly thereafter. And the long-term averages also coincides with that area. So maybe close to around 3750, 3800. It might attempt a respite, but since still uncertainty is still on, so one should wait and refrain from any aggressive long. Those who are sitting with the long positions and wish to see how the things are going to unfold, 3750 spot should be their strict stop losses.
Okay, Ajay, the next query is also for you. It's Bhaskar Madhusudan who's writing to us from Hyderabad. He wants to know which stocks can he look out for if he wants to invest 1 lakh for a period which is less than 1 year. So, would like to know from you which are some of those recommendations that you would have on technical basis for him.
Yeah, so see, basically in this entire rally, we were seeing that the banking has done well while the private banking was sitting on the sidelines. Now, after this recent underperformance, we are seeing the heavyweights like HDFC, ICICI setting a ground for the next leg of the up move. So obviously that can be the area where one can look for fresh investments. Then from the auto space, stocks like M&M, iShares, which are consistently outperforming this space, can also be considered. Then comes the underperformer, means the IT. After almost a year-long underperformance, we are seeing early sign of reversal. Though it's too early to say that we are completely out of woods when it comes to the IT majors. But yes, here means for the alpha part, definitely one can look to invest into some of the private heavyweights like Infosys, TCS. At the same time, the mid-cap IT names like Coforge, Persistent also look good. Along with that, one can accumulate few pharma names like Sun Pharma and Lupin as well.
Right. The next is a caller query from Gopinath from Tirupati. Gopinath, you can go ahead and ask your query.
I want to purchase PCBL at the current price. Is it the right time to buy now?
Lancelot, you have long-term view on PCBL?
This is PCBL packaging or? PCBL, no, actually I don't cover this stock.
Philip Carbon
Philip Carbon, I don't actually cover the stock, so I can't really give a view at this time.
Right. Any technical views here?
So see, we are seeing a gradual drift, though the volumes have dried after this decline or breakdown below 350 mark, but we are gradually inching towards the major support. So since he is planning to buy fresh, he should accumulate gradually instead of one go. So in the range of 280 to 300 is something that he can consider accumulating.
Okay, the next query if we are seeing is from Venkat Reddy, who's writing to us from Hyderabad. He holds 5,000 shares of Engineers India, and this is at a price of 221 that we are looking at. Currently, is facing a loss of about 1 lakh on this counter. Wants to understand whether he should average at the current levels or continue to hold it. Ajit, what would your view be?
So Engineers basically is hovering in this tight band, roughly around 190 to 210, and I guess he has bought it at the higher end. And as of now, indications are in the favor that this consolidation might continue further. So don't look to add fresh until we decisively break this 210 mark, which is the upper band of the same. At the same time, 190 should be your strict stop.
Next query is from Bhaskara Madhu from Hyderabad. He wants to invest 1 lakh. For 1 year. Lancelot, any counter that you would recommend?
I think at this point in time, some of the banking stocks look relatively attractive, and one can invest either banking or finance companies. So you can look at, let's say, M&M Finance, Cholamandalam Investment and Finance, because these would get a significant benefit of the easing of interest rates, and one of these could be bought for 1 year outlook.
Okay, so that's with regard to the fundamental topics that we are seeing over here. But the next question is from Venkatakrishnan. He has 200 shares of Bharat Electronics at an average price of 395. He bought it in April this year itself and wants to understand the next 2-year outlook on this. So, Lancelot, what would your view be for Bharat Electronics, considering that it has a strong order pipeline going forward?
I think it has a very good order pipeline. The business consistency looks, very good. It is the key risk is the execution, how they execute and what kind of profitability they can generate. But given that they have been able to execute reasonably well over the last couple of years, you should see them at least perform the same basis for as far as execution is concerned. While the stock is trading at about 50 times price earning multiple, which is relatively a little on the higher side especially when you consider the average multiple it traded over the last 5 years. It still can be bought even at these levels, or one can even average if it does go lower, considering the long-term outlook.
The next is a caller query coming in from Mumbai. Shaunak, you can go ahead and ask your query.
Yeah, I have bought J. Kumar Infra Limited at 634.43, 300 shares. Should I hold or sell?
Lancelot, any view here on J. Kumar Infra?
I would actually not look to stay invested at this company. You might as well switch to some of the larger companies, because when the space becomes a little competitive, given that we did see some amount of slowdown in allotment of government projects, you may see that some of these companies will face competitive challenges. So it's better to maybe move into larger companies like L&T or even some of the other big companies.
So that's the view for J. Kumar Infra that we have in infra space. Also, what other picks that you can look out for. But the next query now is from Kranti Kumar Rangu. He's bought 3,000 shares of Suzlon at a price of 60. Wants to understand whether he should continue to hold or average at current levels. Ajit, what would your view be? Currently, if you are seeing he's facing a loss of about 21,000 on the counter, so what would you recommend?
So Suzlon is currently retesting its previous support zone, the base area closer to around 50-52 mark, and possibly we may see some rebound. But in case if it fails to hold 55-56 decisively, I doubt that we are going to see any meaningful recovery. Means it could be a trend continuation on the downside also. So as of now, don't add more, but yes, you can continue to hold with 50 as a stop loss. And in case if it rebounds closer to around 56-58, you should definitely review your position.
Next query is coming in from Kirtana from Bangalore. He holds 10,000 shares of Jupiter Wagons bought at a price of 322. Should he continue to hold here, Lancelot?
I think he should, because you are seeing a good amount of order flow coming in from the railways as well as various metro projects for the company. Yes, execution has been a key. The stock looks a little highly valued, but you will see the profitability play out over the next 1 or 2 years. And that should help in terms of improving the price performance as well.
Okay, so that's with regards to Jupiter Wagons that we are looking at. Now, next question is from Aniket Hirmat. He's writing to us from Karnataka. He wants to understand whether it's a good time to enter either DLF or Brigade Enterprises. And this is for a 4 to 5 year of a long-term horizon that we are looking at. So, Lancelot, in real estate, are these your top picks, or would you have any other recommendations here?
Well, I think the real estate space is now getting, fractured into the large luxury players who are seeing good amount of traction and growth in their business. And then there's the low end players. So who are focusing on affordable housing and, quality housing at low price, low cost. So I think the low cost people are seeing pressures in terms of sales dropping, demand dropping a bit. And the inflation in cost of construction and manufacturing all taking its toll there. So I would stick to some of the large players. DLF would be one of them. The other could be the Loda developers, the Macrotech. They would be another good option as well.
Next query is from Murli from Hyderabad. He wants to know whether should he buy 50 shares of Indian Bank at 824. Ajit, any view on Indian Bank?
So PSUs, in fact, we were seeing, steady outperformance, but post this last week of decline, we believe that there could be further correction because the stock has done exceptionally well in the past. Means from 500 to 850, it was almost a vertical rise. So Murli, you should wait for any dip towards 750, 760 area and let it stabilize. Once we see any sign of reversal, then around those levels, you can start accumulating.
Okay, so that's with regards to Indian Bank is what we are looking at. But next we have a caller. It's Damodar is calling to us from Hyderabad. Hi Damodar, how can we help you today?
Hi. My Natco Pharma is my average price is 954. The 50 shares are there. The target price, please tell me.
Do you want to continue to hold it for a long-term perspective?
Hold it. Yes.
Okay.
The short term is my expectation is that 1100 is the target price. How many days you can come the 1100 the target price?
Sorry, what did you say? 1200 is the target that you're looking for.
200. How many days? Long period.
Okay, let me go across to Lancelot then. Lancelot, what would your view be with Natco Pharma for a long-term picture?
I think if one is looking at it from a longer term picture, yes, they have a good API business. They have reasonably, almost 44% export formulation business. So you are seeing good growth as far as revenues are concerned. I think profit margins are an issue with this company, and given that you have seen declines in profit margins as well as sales growth in the last 2 quarters, it might be difficult for the company to get re-rated as far as its price is concerned unless the situation changes. So at this point in time, either one should be prepared to hold on for maybe 3 to 5 years and see, or one can look at exiting and maybe entering at a lower level.
The next caller query is from Hyderabad. Sai, you can go ahead and ask your query.
Yeah. Hello.
Yes.
Yeah, I have an ITC.
Right.
500 shares of ITC, 500. I bought a price of 420.
Right, Lancelot, Sai has 500 shares of ITC bought at a price of 420. Should he continue to hold this counter? Lancelot, any view here? Ajit, any technical view on ITC? 500 shares at 420 is what Sai is holding. Should he continue to hold?
Yeah, so at one end, we are seeing that mixed trend is continuing within the FMCG basket, while ITC has been holding this zone close to around 400 decisively from the last several weeks. And a possible break above 410, 415 can trigger the next leg of recovery also. And since we are seeing volatile markets, prudent to maintain a few long positions in the defensive space as well. So with 390 as a stop loss, definitely he can stay put.
Okay, so hold is the view that we are looking for ITC at the current juncture, but it's time that we slip into a short break, but do stay tuned. Lot more queries on the other side.
Has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Welcome back. You're watching Ask Profit on NDTV Profit. The next query is coming in from Chennai. It's a caller query from Venkat. Venkat, you can go ahead and ask your query.
Hi, good morning. I'm Venkat from Chennai. I just need a short-term target for Post Motors. I hold 220 and I'm currently making a loss. So it's around something like I bought it around 18,400 or something.
Ajit, your view on Force Motor?
So while the auto counters are comparatively stronger, Force is currently witnessing a consolidation while holding above its 100 EM, which is a good sign. Means as long as we are holding above 16,700 mark, one can continue to stay put. Possibly, in case of rebound, 18,700, 750 will be the area where it might again face resistance. So as of now, it's a hold with 16,750 as a stop loss.
Okay, the next query is from Krishna Murthy, who's writing to us from Mumbai. He's holding 50 shares of TCS and he's bought this at an average price of 4,278. As of now, if you look at the kind of loss that he's making is roughly around 50,000. Wants to understand whether he should continue to hold for a long term or average at the current levels. Lancelot, what would your view be?
I would even average at the current levels because, if you see the business conditions for these technology companies are actually changing and we are seeing some order wins come in. So I think that's a positive sign. Plus, I believe that over the longer term, when artificial intelligence starts to get into the implementation phase, there'll be a role for companies like TCS and Accenture and, to play in terms of helping the companies integrate artificial intelligence into their existing software. So I would still look at either averaging or holding on to the stock.
Queries from Prasanna. He has few shares of RVNL bought at a price of 604. He wants to know whether is it worth holding for long term. Lancelot, your view on RVNL?
So I think the price is a little on the higher side. So while the long term business appears to be is quite reasonable, the valuations are a little bit stretched. The stock is trading at about 60 times its earnings. So you can hold the existing investment and probably if it comes back to about 25-30 times its earnings, one can look at averaging out even at that level.
Okay, moving on, we have Raghu who's calling to us from Bengaluru. Hi Raghu, how can we help you today?
I'm holding Gabriel, bought at 1100.
Right.
With a loss of around 14%.
Okay.
Is it right time to add some more?
Just want to understand, when did you enter this particular counter and what's the kind of investment period that you're looking at?
I've been adding over a period of time as it came down.
Okay.
So now my average price is around 1100.
So it's the long-term picture that you want to know about this particular counter, right?
You're right.
Yeah. Lancelot, can we come to you on Gabriel India? What would your view be?
So I think, yes, the long-term outlook for this company is good. Gabriel India manufactures, shock absorbers, fork struts, and front forks for two-wheelers. And they should be seeing good growth because overall two-wheelers, whether it is electric or otherwise, would require these kind of components. and Gabriel India is one of the leading companies in the space. However, it is trading at about 58 times its earnings, which is relatively on the higher side. So having gotten, made an entry at a very high level, one should wait for a bit more correction and then look to average out. But over the long term, yes, it's a good company to add and hold in your portfolio.
The next query is from Anjali from Karimnagar. She's holding 200 shares of Bajaj Housing Finance, bought at a price of 140. She wants to know whether should she continue to hold this counter, sell or average. Ajit, your view on Bajaj Housing?
The stock is trading at a 52-week low with hardly any sign of recovery. In fact, post this recent block deal, we are seeing fresh pressures. So definitely you should avoid adding more. Since the view is long term, definitely you can stay put. But for any sign of reversal, the stock should cease at least a week or two of decisive up move with volumes. Then only we can see a reversal. So as of now, you can hold, but avoid adding more.
Okay, so avoid is what we are looking at current levels. Next query if we see is from Praneeth, who's writing to us from Hyderabad. He wants to understand whether it's the right time to buy Piramal Pharma shares for a long-term outlook on this. So Lancelot, what would your view be with Piramal Pharma?
I think Piramal Pharma, definitely one can look at holding the stock. And even if one has to add, I think it can be added at declines.
So that's the view for Piramal Pharma that we are looking at. But with that, let's start the second round of rapid fire. So I'll request both Ajit and Lancelot to keep their answers short on this. So the first query, if we are seeing, is from Mandar, who wants to understand the long-term picture for Yatharth Hospitals. Lancelot, what would your view be?
I would hold on this stock.
Next query is from Kirtana from Bangalore. 1,000 shares of Electra Green Tech, bought at 1,498. Lancelot, your view on Electra Green Tech?
I would actually book profits or exit at this point in time.
Okay, Roopchand owns 520 shares of Sula Vineyards at price of 480 and she's been holding it for a long term, wants to understand whether she should continue to hold or sell. Ajit, your view?
Use recovery to reduce.
Prakash from Bangalore holds 2,400 shares of Ion Exchange, bought at a price of 556, currently at a loss of 40%. Should he continue to hold or sell, Lancelot?
He should hold.
Okay, Prakash is holding shares of DCX India at price of 210, holds about 300 shares. So whether he should hold or sell is a query. Ajit, your view?
Looks extremely oversold. Use recovery around 200, 210 to exit.
Gul has few shares of Taj GVK, bought at a price of 445. She wants to know whether should she add more at the current level, Lancelot?
You can add at the current level, yes.
Okay, Shrikant is holding 46 shares of Tata Capital at 326. What's a short-term view on this one? Ajit, your view?
Looks range bound. Wait for a break above 330 to add more.
Nachiketan from Bangalore wants to know whether is it a right time to enter Fino Payments Bank. They have received the small finance banking license. Lancelot, your view here?
I would not enter it because the license is going to have a lot of time for them to play out.
Okay, Shivani is holding 350 shares of JK Paper at an average price of 433. Wants to understand whether she should hold or average it out. Ajit, your view?
Hold and use recovery to reduce.
The final rapid fire query is from Ishwar. He wants to know the long-term perspective for Jupiter Wagon. Lancelot, should he buy Jupiter Wagon for long term?
He can buy it actually if he's looking at long term.
Well, with that, we end our rapid fire query. Both the guests, Lancelot and Ajit Mishra, thank you for joining us and giving us your views and perspective on the stocks that we discussed. Well, with that, it's an end at this edition of Ask Profit. Stay tuned and keep watching NDTV Profit.
Has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
while we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of a weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hello and welcome to KYC. I am Sharad Dubey and the company on KYC's radar today is Fino Payments Bank. The bank is of course in focus because it's the first bank getting RBI approval to come in to the SFB, that is the small finance bank, and this is the first payments bank to do. But a lot of key questions are there because has it actually proved post listing how the company has been doing, and also the question is now small finance bank status also comes in. So is the company actually prepared for it? That's the first question I would be asking. What will be the strategy going ahead for Fino Payments Bank now? It's almost 5 years, we could say, from their listing. What will be the bank do? Because the bank doesn't have a lending DNA. So how will that bank actually work on that front? That is a very important question. The third question I'll be interested in is what will be the expected timeline to onboard this new talent, because you will be needing a lot of new talent in this entire new setup where the bank is going towards. Also, the fourth question, which will be the most important one, is the large shareholders. They have to reduce the shareholding
as per the RBI norms so that they can transition into the small finance banking space and the definition, and when will the core banking solutions be implemented? That's an overhang in the stock, by the way. So that's something we'll be asking the management. Also, how does the company navigate this scrutiny which is enhanced right now as per RBI in this payment industry, and it comes out with flying colors? That's a question to be asked. Also, the guidance on the lending business ahead, that's one of the most important things which the interest will be coming in. But come over, let's explain you the entire process, how this actually thing happens, and also what the company is all about. There is just a basic banking, remittances and financial services. That's what the company actually does. And also looking at the important key details, they have third-party offerings as well. These are nothing but the referral loans as well. Interestingly, its a business model is asset light. They have limited branches but a vast merchant network, and the company claims 90% of the coverage is there in the entire India's distribution. They have instant B2B and B2C remittances. Also, ownership model increasing in the customer base, and if you look at the other aspect of it, there is an enhanced annuity income as well. Coming out to the target customers, this is a very different one. They are targeting large, lower income category in rural areas, and also to be precise, the people having an income of almost 2 to 5 lakh rupees per annum. That's the target customers they are looking at. And the product mix, it's a bit varied, but it's important. Digital payment is largely 30% CASA, roughly 28%, domestic remittances and cash management services are there. So a lot of moving parts are there when you talk about the product mix, and the smaller ones are also there, which are there on your screen, which you can see. But most importantly, the important news flow is that it has a pan-India presence. As of FY25, let's check out the branches, how they have actually panned out. There's 33 branches here, north, higher side, lesser kind of expansion in the west and the south regions. But net, they have a distribution moat, that we need to agree on that. But the question remains is, now it's coming to the new portion. It's called a small finance bank, and we'll give you all the details about it. But let's just give you the entire setup of how we judge a company in KYC. There are important parameters also, but this time I have tweaked the parameters because the company is going under a sea change right now. There is going to be a pivot or an inflection point in the company's journey. The first one is recent updates. That's where we are going to check. Income statement, operational metrics will be there, and return ratios will also be there. Apart from these numbers, shareholding, street cred, valuation, and interestingly, street coverage and outlook is something which we will judge the company in our show for the KYC rating. So without further ado, let's start with the first and the most important thing for this KYC is its recent announcement. Let me take some time and give you break by break what it actually means. RBI has granted approval to convert in a small finance bank, and this is the first payments bank to actually transition to this space as a small finance bank. A bank had applied for this small finance bank license way back in December 2023. So it is a very pivotal announcement for the bank itself. Now there are some benefits also for this transition when small payment banks come into the small finance bank. This includes ability to offer loans, removal of deposit cap, they can issue credit cards, a wider product suite also coming in, and interestingly, the access to the priority sector lending opportunities. So the business scope actually becomes very big, and the customer base is also large. Earlier the customers were there, but it was the rural segment. Now it seems like they might be going in for a higher range of customers as well. There are some key positives and negatives which I have actually jotted down for you so that it becomes very simple when I give the rating why I'll be coming at that rating. The positives of course include lending growth and revenue contribution. That is obvious. Profitability is expected to increase post the transaction. That's where the community is bullish. The MK note has suggested low cost liability advantage. That also kicks in, especially the cost of funds analysis, which I'll get to you in some time. Replacement of low yield investment with higher yielding loans. That is definitely positive, and it aids the financial numbers for the bank itself. And the long-term ROE that could rise to 17% by FY28. So that's a very positive outlook coming in. But of course, there are some negatives also, and these are the key questions we need to ask, because the company needs to perform to actually reach that status and actually sustain as well and give returns to the shareholders. The negatives include the lack of lending DNA. That's the most important question, as how company will navigate this important statement. Lending will require renewed governance structures, new employees coming in, a senior management expected to be hired. That is how the boat will going ahead. Enhanced competition in MSME and merchant lending business, that's already there. So company will have to come out with a good strategy. As of October, it's not implemented. There is a new in-house core banking solution that itself, in their previous con call also, they stated that it's not implemented yet. So that itself is a major overhang. So the company is having a couple of more overhangs apart from the transitioning overhang which is there, and the payments business across the industry. And RBI has actually enhanced their scrutiny as well. So this is of course an industry specific concern, but nevertheless this is also a minor overhang when it comes to the negatives. So I explained you both the positives and the negatives for the first recent update rating parameter which we have created for our show. I'll be giving a neutral rating because the company needs to perform also and show also how they are effectively transitioning. So for that, a 0.5 rating would be coming in and a neutral one for recent updates. Let's move on to the income statement part. The financials are also pretty much important. Largely, if you look at the screen, we have taken last 2 financial years numbers. Even the H1 numbers were pretty decent. Income is there around 1847 odd crore rupees for FY25, and margins, it's almost flattish, just below the 13% mark coming in, and PAT there has been an increase. So net, I would give a neutral rating for the company. The third one is the operational parameter. Yeah, out here largely we see the cost to income ratio that is stable. That's roughly around 25.6 odd percent. That has actually come down. So it's a slight positive, and net interest income also a good jump coming in. Provisions and even the cost of funds, if you look at it, that has come down. That's very much important for the bank at this moment. And just look at the screen, that's at 1.9, that's gone down the 2%. So I would be giving a healthy thumbs up for these important operational metrics. Now the return ratios, they are also very much important when you judge any institution, be it a financial institution or a non-financial institution, and a decent number is there. That's roughly, you could say, around 14.4% in FY24, slight decrease in FY25, but still 13 odd percent. It's expectable. ROAs, that has come down a bit, but the leverage ratio, that is a concern for me. But net in the current scenario and going ahead, these numbers are going to improve when we transition into that small finance bank definition, and because of that I'll give a neutral rating for this. So 4 parameters we have already discussed: return ratios, operational metrics, income statement, and recent updates. The 5th one is the shareholding segment. Over here nothing much happening, if you're honest. Our promoters are at 75 odd percent stake, but looking at the FIs, they have actually reduced their stake. That's coming at 2.67%, and DIs also 3.52%, is a slight reduction in 2 years at 3.35%. Retail has been relatively stable, and there is an overhang also which comes into the company, is that the large investors need to reduce their stake more so that RBI's transitioning norms are ticked, and the small finance banks transition also comes without any problem. So there is an overhang in stake sale as well, and the reduction is already happening. So from my side, for the shareholding pattern segment, I will give a thumbs down for this entire rating. 6th is the street cred. Largely from its listing price, I checked the numbers, it's down 47%, but 1 month basis the stock is up 8.5%, 3 month basis stock is up 12%, and 6 month basis also it's a decent 10%. So for the short term or a medium term shareholders, this has been largely, we can say, a decent kind of a run up, but of course 1 year basis there is a different story. It's down 16 odd percent. So for this divergence trends coming in the street cred, I will give a neutral rating for Fino Payments Bank. The 7th parameter is the valuations front. Remember, this is not a PSU bank or neither it's a Bajaj Finance or a very expensive kind of a stock. This is a very different kind of a setup, and now Fino Payments is having a 3.2 times price to book ratio, and 1 year forward basis it's on the lower side, it's around 1.0 times, 3.02 times. So largely net it's a neutral impact for the valuations. Will this be a re-rated? Will the valuation get re-rated post its new transition? That is something which the street will be watching out for, but as of now I will give a neutral rating for Fino Payments Bank when it comes to the valuations front. 7 parameters done. The last parameter is of course the street coverage and the outlook. I have got them both together. Hardly tracked. Average upside potential is still 22% from current level. Stock has taken a beating from its 1-year levels. So there is some scope of up move here, and 2 ratings are there where there is a buy rating coming from the analyst. But the most important thing you should be watching out for is the outlook going ahead, and that was strong. In the Q2 con call which I heard, they are targeting a 5,000 crore lending AUM during FY 28 to 30. And interestingly, these numbers might change also as the company is transitioning to SFB, and they are lending to contribute 20 to 25% of revenue within first 3 years of the SFB, small finance banks operations. And we had spoken about it, that lending might be the Achilles heel for the company, but overall they are expecting this revenue to actually increase going ahead. So that is one of the most important questions we'll be asking the management in some time. Also, interestingly, the H2 is expected to be better in terms of profitability as well. Let's revise all the entire setup of KYC at the ratings which we have given, so that you get a crystal clear picture and a 360-degree view coming in. Recent updates, it's neutral, but a very major update has come. Company has got RBI approval to go into or convert itself into a small finance bank. Income statement largely decent. Operational metrics is something which I liked. Return ratios have been neutral, and going ahead, the shareholding, that's where concern. It's a major overhang as well. Street trade valuation largely neutral, but the coverage and the outlook, that is something which I really liked. But net, if I had to give a total rating, that would be around 4.5 out of 8. And generally, this is a decent or a higher side rating which we get generally when it comes to the KYC show. Well, we'll slip into a very quick break. On the other side, we'll talk to the management going ahead.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
We are trading above 90. Our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of a weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Welcome back to Know Your Company, and now we are joined by the management, Rishi Gupta. He's the MD and CEO at Fino Payments Bank. A very good afternoon to you, Rishi, and congratulations. This is the first payments bank to get RBI's approval for small finance bank. The journey is expected to be really tough. That's what the analysts are stating. So how prepared actually are you, Rishi? How prepared is Fino Payments Bank? What will be the strategy going ahead? We all want to know.
Thank you. First of all, let me thank the regulator, RBI. I'm grateful that the trust which they showed and converted the Fino Payments Bank into an SFB. I think that's a great testimony of the work which we have done in the last 7-8 years. From a payments bank to an SFB journey, see, we have built up a lot of rails as a payments bank, and that will come to our advantage into an SFB model. Rails around building up a technology platform, completely technology-enabled, digital-enabled platform, large amounts of rupiah transactions happening on platform. The amount of data which we have for our customers and merchant is enormous, and we'll leverage that data as we go forward as an SFB. The second is a distribution channel. As a payments bank, we have nearly 20 lakh merchants and distributors across the country. Largely 95% of the PIN codes we are covered. They help us in raising low-cost liabilities. We already have a 2,600 crore liability balance. We do about 700-800 crores liability addition every year from forward from here. That will give us a big advantage in terms of the cost of fund. Then the entire partnership model which we have built with a lot of merchants, distributors, and a lot of companies. I think some of this advantage on technology distribution is going to be the key. Obviously, from a payments bank which didn't have a annuity income, it was largely a transaction income, so the balances of customers were also low. Once we move to a SFB model, we get a lot of advantage on building up a liability franchise, a much deeper liability franchise at a low cost because of the distribution network which we have created as a payments bank. Over and above the liability franchise, we will focus on building up a secured lending book to our merchants, to our customers, and through that network which we will be able to build. Our ability to raise low-cost deposit is actually will help us as a small finance bank with a much higher NIM compared to the peers in the industry, at least for the first 3-4 years of operations which we see. And I think that those advantage is there. I would say while we have been able to, as a payments bank, we have been able to do business as a payments bank, which was the most difficult model. Lending to that extent, if you do it in a very structured approach, in a very cautious way, and do it right, focus on few geographies and a few products, I think you can build up a very robust and a very model which can be scalable.
Correct, Rishi, but the question remains is the bank right now is not having that DNA. That's what the street is a bit concerned about, the lending part. So how will you infuse this lending DNA to your bank now? Now you're going towards the road to the small finance bank.
The biggest DNA in any company is the way they do business. And you are right, lending is not something we have inherently, we have experience, but we have a lot of people who have a banking experience. And this has been in the works for the last couple of years. So the last hires in the last 6 months to 1 year has people who have a banking experience. We are already getting a lot of interest from people who have a lending experience, and that is a model which is already established in the ecosystem. We built up a payments model where it was not established. It was completely a new dimension to any business. So when we were able to build that model, we don't see it a challenge that from a payments bank model to an SFB, even with limited lending experience, we will not be able to build. We will get right people, we'll get the right technology, we'll get the right AI tools as we get into this business. A lot of analytics and data which we have will benefit us. So the hiring of the right people is already on. We are in the process. We have done a lot of work in the last 6 months. Looking forward to the opportunity to convert. I think those advantage will be there for us. I don't see that as a challenge because of the quality of people which is already there in the market who understands the lending business, and having done businesses where there was none in the last 20 years as Fino, I think we are in a good position to convert Payments Bank into a small finance bank.
Rishi, but the street is concerned about the timelines. You mentioned earlier 6 months is something which you are working on, the resources, especially on the front of getting new talent in. Can you give us some timeline by when this kind of talent, which is having a good experience in the lending space, will come on board with you? If you could give us a flavor of any timeline.
Yeah, so we were waiting for the final license, the in-principle license to come. Obviously, we have interviewed some people. We'll be closing those pieces in the next 1 or 2 months. Suppose that we will give the offer. So anything between 3 to 6 months, you can expect that the talent will start coming into Fino, specifically at the top level. And as we get closer to the rollout is where we start building up the field level talent on the ground across the country, wherever we want to build up the lending business per se.
So 3 to 6 months is the time where we'll get the opportunity to see some top level appointments coming in the lending space. Also, Rishi, there are some RBI provisions, when you're transitioning into a small finance bank, and large shareholders are expected to reduce their stake. Have you had the conversation with these large shareholders that by when they will be selling? I think 18 months is the number which I'm looking at, but what's their view coming in case if you had a chat with them?
So first of all, this is at the holding company, not at the payments bank level. So holding company holds 75% of the bank. There is some ask on the holding company equity shareholding which needs to be changed. So the license came only on Friday evening. We'll be having conversations starting this week with the holding company and some of the investors at the holding company level. So it's a little premature for me to actually talk about the roadmap on that. But there is already some conversations which we have had with them in the past.
All right, that's pretty interesting on that front. But apart from that, there is an overhang also. In the last con call, I was hearing that the core banking solutions has not been implemented yet. Is it the same story right now, or will we see some timelines where this core banking solutions also comes in? This has nothing to do with your recent announcement, but there is an overhang and street is concerned. So can you just give us the timelines for this?
So on the core banking platform, there were 2 projects which we were working on. One which we were working on the whole of the core, and secondly is the core migration from FIS to Finacle. All of the core projects have already got completed, and the POCs have already done. We are now in the process of migrating some of those things which we have hollowed from the core banking to a separate technology platform. So that delivery started from early October, November onwards. So core banking platform is also more or less ready. We are in the final stages of migration. Hopefully by end of December or January maximum, we expect that the CBS migration should happen. We are on track for that. In fact, on the technology side, we have also done a lot of work on building up the core technology platforms for the lending bank as well.
All right, that's a pretty interesting take coming in. So by the end of December or January, the core banking solutions overhang, that is there for the stock, that might be over as well. So important date lines coming in from the management. Thank you very much, Rishi, for giving your time and explaining the road ahead for Fino Payments Banks now as it moves towards a small financial bank status as well. But in case you missed it, what we have actually done, there's a very important commentary coming in from the management, and the major announcement is it is the first payment bank to get SFB license. They are building tech platforms, distribution channels, and that's why they will be transitioning to SFB, and this will come under their positives as well. The company is estimating that there will be lower cost of funds also with the distribution as their moat, which we already know. Company will be focusing on the secured lending book, and a higher NIMs is something which they are targeting for the next 3 to 4 years going ahead. And the last but not the least is the top level talent, because the company doesn't has much of a lending DNA. So they will be hiring top level folks in the next 3 to 6 odd months, and last 6 months they have been doing some groundwork as well. And interestingly, the core banking solutions, that itself, if you look at it, they are expected to be implemented by the end of December or January. So that's the entire picture for Fino Payments Bank. Thank you very much. Stay tuned to KYC and keep watching NDTV Profit.
Has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
We are trading above 90. Our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of a weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way. You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Benchmarks start the week on a weak note. Nifty hovers near 26,000 level. Sensex sheds more than 300 points. Real estate defends on the back foot today. PSU banks take a breather. IT remains resilient. Fino Payments gets RBI's in-principle nod to convert to small finance bank. Stock cracks over 6% despite the approval. FADA data suggests that auto demand stays strong in November despite the high base. Auto retail rises just over 2% year on year despite a high base, and passengers and commercial vehicles do well. Two-wheelers lag behind. It's an NDTV Profit exclusive. Government starts reviewing Vodafone Idea's AGR dues. This after the Apex Court allowed reassessment up to FY17. Relief talks still preliminary. Indigo's operations are finally stabilizing after a week of severe disruptions. Flight cancellations dropped from more than 50% to around 25%. Show cause notice issued to the airline for causing inconvenience to the passengers. Wakefit and Corona Remedies IPO open for subscription today. Wakefit to raise 580 crore rupees with a price band set between 185 to 195 rupees per share. Hello and welcome. You've joined us on Markets at 12. I'm Nisha Poddar and let's take a look at the markets. Well, it's a weekday of trade for the market. Nifty at hovering around the lower point of the trading session, currently 0.5% down, losing over 100 points in trade and just about, remember, holding on to that psychological level of 26,000 levels. Now, when we talk about Sensex, which has lost about 300 points in trading session, Bank Index, remember, is leading the charge. Some of the banking names are the ones which are also key draggers, is an underperformer versus the key indices, with State Bank of India, the big boy from the banking space, a key dragger in the market. Well, when we talk about some of the other big companies on the drag, which is lower in terms of contribution to the Nifty 50, is Bajaj Twins from the financials. Also, the drag on the indices coming in from the sectors which are like real estate sector, which is the worst performing sector in the trading day, along with the PSU banks. Rupee weakness is impacting the IT sector still, and that's why it is in the green. Big boy Reliance Industries is also showing a shade of green. But the stock of the moment today is Interglobe Aviation, over 6% down in trade. And in the last few trading sessions, remember, over the 5 trading sessions that we've seen, it has lost around 14% since the aviation crisis hit the company's operations. So this is the key stock in focus today, still continuing on the downward journey. So when we talk about Indigo's operations, they are finally stabilizing after a week of severe disruptions, which you and me, all of us have faced. Now, the flight cancellations have dropped sharply for the company, and on-time performance is also recovering from the record lows. In fact, my colleague Danish Anand has been working on these developments very closely and is getting us all the latest news. Joins us now with what's the latest, Danish, and how soon till we see a full stabilization, and how's Indigo getting impacted right now?
First of all, if we talk about the on-time performance of Indigo, it has drastically improved from an all-time low of 3.7% 2 days back to above 70% as far as yesterday's data is concerned. So we can see that the on-time performance of the airline is improving. But at the same time, if we talk about the overall cancellations, even the number of cancellations have come down. 2 days back, we saw over 1,000 flight cancellations. Yesterday, dropped to over 600 flight cancellations. And today, it is anticipated that Indigo will be cancelling only 200 to 400 flights in this particular range only. So we can see that the airline is trying to bring back its operations back to normalcy. But on the other hand, the airline has already indicated to the government that by 10th of February 2026, they expect full stabilization in operations to happen. But that is a very long time, and over the past 1 week, we have seen enough regulatory action taken by the DGCA as well as with the Ministry of Civil Aviation on the entire airline. And the most latest is the show cause notice that has been issued by the DGCA to Indigo CEO Mr. Peter Elbers, as well as the accountable manager, who is the COO of Indigo. So both of them were supposed to file a reply by 6 p.m. Sunday, but they asked the government and DGCA if they can get one more day to file their answers. So by evening, we can expect a proper reply on these both show cause notices by the DGCA to Indigo. But all in all, if we see, Similarly, if we talk about the overall disruptions, we are seeing proper normal scenes at the airports now. It is not as sad as it was a few days ago. So with Indigo cancelling its flights in advance, so we are seeing that passengers are not coming to the airports since they are well informed earlier. So it is expected that by evening Indigo will be filing a reply, and then we can come to know that what exactly went wrong and why didn't Indigo properly follow the new FDTL implementation rules.
All right. Thank you so much, Danish, for getting us all the latest that's really developing on this big aviation crisis that hit Interglobe Aviation. Let me take it across to Sanjay Lazar, who's the CEO of Avalanche Consultants, joining in with his take on this crisis and the way forward, and also an eye on Indigo and Interglobe Aviation stock movement. Sanjay, always a pleasure to welcome you on NDTV Profit. My first question, UBS has cut the target on the price of the Interglobe stock to 6350. It is hovering around 4,900 currently. Jefferies maintains a target of over 7,000 rupees per share. The stock has already seen almost a 14% drop in the last few trading sessions. What's the way forward that you're seeing given the number of aspects that are really impacting the company now?
Thank you for having me, Nisha. First of all, happy to note that there is some sense of normalcy returning to the schedules. I think they're still at 1,500, 1,600 flights. They'll gradually inch up to 2,200. Of course, they will submit their replies today. But the big issue for Interglobe and Indigo and the aviation market will be to watch and wait for the kind of response that follows from the central government, that's the Ministry of Civil Aviation, as well as the DGCA. Because I think this entire chaos is very much of Indigo's making and no one else. So I do expect some pressure on the counter for the next few sessions. Talking about the targets given by the broking houses, great. I mean, Interglobe is a great company. In the end, they will turn it around. They will, work out their problems. But I do see, some tough days ahead for them. I see a lot of monitoring, a lot of supervision. I see a very heavy penalty. I see the exit of some people for certain. And usually because there is a amount of, I wouldn't call it mistake. I'd call it, something more deliberate perhaps, because they knew they were short of pilots, yet they filed schedules which had 1,000 flights extra over the summer. They did not prepare, they did not recruit. There's a lot of missteps, and that's going to be penalized by the government and the ministry and the DGCA. So I see that's going to be a big issue for Interglobe. I also see other airlines now putting pressure.
Right. One important aspect that you mentioned, Sanjay, is it looks like it was deliberate because they had enough time to prepare to really comply to the FDTL norms, and they failed to do so. Now, tell me one important aspect, which is a full refund and the kind of chaos that has been created, the impact, monetary impact of that on Interglobe Aviation. Then also only limited relaxation has been given to the FDTL norms for the company, only till February. So given that, they still have to comply, which will also add to the cost pressure for the company. Given these two aspects, how will Interglobe Aviation be a lowest cost airline? Will it continue to be like that? And how will it be able to manage the competition in the market as well? Where does it put the low-cost airline of Interglobe after all these aspects impacting and putting pressure?
Great questions, Nisha. Let me take them one by one. One is the compensation aspect. Now, we've seen that they've refunded about 650 crores until yesterday. That's what they claimed in their release. And that's for the passengers up to the 5th or the 6th. There may be some more in the making, but this does not take into account passengers of the 2nd, 3rd, and 4th who have been excluded from this and who are all fighting for their refunds or compensation. There's a PIL in the works. Almost 200 people have signed it. I think Interglobe is going to get hit with that. Demanding compensation from number of passengers. The other thing is there's going to be a huge fat penalty by the government of India on Interglobe for willful violation. We don't as yet know what the court will do, because remember, this is a violation of also what was a court-appointed car. So that's another aspect. I'm counting the blows that they're going to take. They're also likely to be asked to curtail their schedule, to reduce their percentage so that other airlines can take it, because they don't have pilots and they cannot get the pilots overnight. They've promised to get some 65 or 100 odd pilots by Feb 10th. We have to wait and see. That will add to their cost. One media house has reported 900 pilots by the end of December next year. That's 450 and 450. That's a huge knock. It also means we don't have 900 commanders available in this country, or 450 commanders available in this country. So it means a lot of FATA pilots, foreign pilots. Foreign pilots cost 3-4 times the Indian pilots. So that's going to be a huge cost for the Interglobe company. The other aspect that will come into the fore is what kind of restrictions are put on them after this. And that's something that we need to see about the low cost. Now remember, Indigo has moved on from a pure low cost platform to a hybrid model. They brought in the stretch, the XLR will come in, the 350 will come in. All of these are going to come in, and Indigo has moved to the hybrid model. So it's no longer a pure low cost. However, they've been operating operationally with a low-cost format, and they will need to become more full-service carrier in terms of manpower planning and operational requirements.
Yes.
That is going to impact their cost platform somewhat.
Right. And my final question to you, Sanjay, is that how do you see the path forward for recovery of Indigo while we are still yet to see the kind of pressures that would be that the company will have to really handle by way of this particular crisis? So how long could it really take for Indigo to really come back in the recovery mode?
Nisha, we've had a terrible tragedy of a crash 6 months ago, and you can see that Air India is still recovering from that. It's a painful blow. Now, this is the complete loss of not only consumer trust. Look at social media, look at the television channels, look at international channels. They're all talking about one thing and one thing alone, Indigo.
Sanjay, I'll have to intervene here. Prime Minister Narendra Modi's remarks in the Lok Sabha during the special discussion on 150 years of Vande Mataram. Listen in.
उन्हें स्मरण करना इस सदन में हम सबका ये बहुत बड़ा सौभाग्य है, और हमारे लिए गर्व की बात है कि वंदे मातरम के 150 वर्ष निमित्त इस ऐतिहासिक अवसर के हम साक्षी बन रहे हैं। एक ऐसा कालखंड जो हमारे सामने इतिहास की अनगिनत घटनाओं को अपने सामने लेकर के आता है। ये चर्चा सदन की प्रतिबद्धता को तो प्रकट करेंगी, लेकिन आने वाली पीढ़ियों के लिए भी, दर पीढ़ी के लिए भी ये शिक्षा का कारण बन सकती है अगर हम सब मिलकर के इसका सदुपयोग करें तो। आदरणीय अध्यक्ष जी, एक ऐसा कालखंड है जब इतिहास के कई प्रेरक अध्याय फिर से हमारे सामने उजागर हुए हैं। अभी हमने हमारे संविधान के 75 वर्ष गौरवपूर्व मनाए हैं। आज देश सरदार वल्लभ भाई पटेल की और भगवान बिरसा मुंडा की 150वीं जयंती भी मना रहा है। और अभी अभी हमने गुरु तेग बहादुर के 350वां बलिदान दिवस भी मनाया और आज हम वंदे मातरम की 150 वर्ष निमित्त सदन की एक सामूहिक ऊर्जा को उसकी अनुभूति करने का प्रयास कर रहे हैं। वंदे मातरम 150 वर्ष की यात्रा अनेक पड़ावों से गुजरी है, लेकिन आदरणीय अध्यक्ष जी, वंदे मातरम का जब 50 वर्ष हुए तब देश गुलामी में जीने के लिए मजबूर था और वंदे मातरम के 100 साल हुए तब देश आपातकाल की जंजीरों में जकड़ा हुआ था। जब वंदे मातरम 100 साल के अत्यंत उत्तम पर्व था तब भारत के संविधान का गला घोंट दिया गया था। जब वंदे मातरम 100 साल का हुआ तब देशभक्ति के लिए जीने मरने वाले लोगों को जेल के सलाखों के पीछे बंद कर दिया गया था। जिस वंदे मातरम के गीत ने देश को आजादी की ऊर्जा दी थी, उसके जब 100 साल हुए तो दुर्भाग्य से एक काला कालखंड हमारे इतिहास में उजागर हो गया। हम लोकतंत्र के गिरोह में थे।
All right, so that was the Prime Minister talking in the session. Now, before we slip into a short breather on markets at 12, on the sidelines of the launch of Parva, well, SEBI Chairman Tuhin Kanta Pandey highlights the importance of data privacy and also adherence to methodology. Listen in.
क्या ये सिर्फ एल्गो ट्रेडिंग के लिए है या स्टॉक ब्रोकर्स जो टिप्स वगैरह देते हैं या फिर इन्फ्लुएंसर्स जिस तरह से दावे करते हैं सोशल मीडिया पर, उनका भी वेरिफिकेशन या चेक हो सकता है निवेशक कर?
ये बेसिकली कहीं भी जहां पास रिटर्न की आप बात करते हैं, जिसको कि हम रोकते हैं, हम ये कहते हैं कि आप अपने पास रिटर्न को, आप रिटर्न को नहीं बता सकते अनलेस इट इज़ ऑथेंटिकेटेड। अब ऑथेंटिकेशन का सिस्टम क्या है, वो एक सिस्टम करना, और ये विश्व में हम प्रथम बार कर रहे हैं, जिसमें कि हम एक इंडिपेंडेंट एजेंसी को एक डेटा सेंटर से लिंक करके सारे डेटा फीड करके उसको निष्पक्ष भाव से उसको एक दिया जाएगा। और यदि वो चैनल, ये वाला जो चैनल विकसित होता है, तो इसमें बहुत सारे जो त्रुटियां हमने देखी हैं हमारी मार्केट में, इन्वेस्टर सर्वे के द्वारा हमें जो नज़र में आती हैं कि इन्फ्लुएंसर्स का एक्सेसिव इन्फ्लुएंस है, लेकिन उनके पास कंट्रोल नहीं है, वो रजिस्टर्ड भी नहीं है। और जो हमारे रजिस्टर्ड एडवाइज़र्स हैं, उसको भी जब तक ऐसा कोई सिस्टम ना बन पाए, हम उनको रोक रहे हैं कि आप नहीं दे सकते, क्योंकि हम एक रिसर्च एनालिस्ट वर्सेस दूसरे रिसर्च एनालिस्ट को कैसे डिस्टिंग्विश करेंगे।
Has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
We are trading above 90. Our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of a weakness in the rupee, and we'd actually look for a reversal back below 90.
2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way. You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Welcome back. You're watching Markets at 12, and yes, the market is getting more weak at the current moment at noon. Nifty 50 gone lower and just about touching that 26,000 mark. But what's also fallen is Vodafone Idea stock 3.5% down at the low point of the trading session. Remember that the government has started reviewing Vodafone Idea's AGR dues after the Supreme Court allowed, remember, the reassessment up to FY17. Relief talks are still preliminary, remember, and a full waiver is off the table. In fact, our colleague Shrimi gets us more exclusive details and updates on what's really transpiring on the waiver. Shrimi.
Yeah, that government is once again taking a close look at Vodafone Idea financial stress, especially after the Supreme Court October order, which allowed reassessment of the company adjusted gross revenue, that is AGR, dues up to FY17. That includes both interest and penalties, which is, as we know, around 83,000 odd crore. Now, according to people familiar with the conversation, the center is assessing how much relief is actually legally feasible. In fact, what we've been given to understand that a complete waiver of AGR dues is not on the table. Rather, support would be given to the telecom player without going beyond the legal boundaries. Now, last Thursday, senior official from Department of Telecommunication and Finance Ministry sat down, discussed and explored the possible routes for the relief and the legal boundaries. These discussion, however, still at the preliminary stage is what source indicating, and there's no concrete view actually been taken during the meeting. In fact, sources said that another round of meeting is expected soon in this matter. Now, there is no such deadline to come out with a resolution, but December end is what they want to take a call on the extent of relief is what source indicating. So for now, the reassessment permitted by the Supreme Court offers Vodafone Idea a narrow window of potential relief, but how much actually that turns out into a meaningful support will depend on what the government concludes actually in the coming weeks. So do remember that if Vodafone Idea gets any relief on the AGR matter, then other telecoms grappling with a similar situation might too approach Apex Court for similar sort of relief, unless government put out some caveat which is being worked out for Vodafone Idea.
Thanks, Shrimi, for getting us all those details. And yes, this is looking like not so good news. Vodafone Idea at the low point of the trading session. Now, key trade dialogue really kicks off this particular week. A US delegation will be in India from the 10th to the 12th of December. Now, the two sides, remember, are set to hold crucial talks on the tariffs and other key global topics. And remember, all eyes would be on those tariff deals. While we are talking about trade talks, let's also listen in to some important commentary coming in. Here's External Affairs Minister S. Jaishankar talking about India will maintain freedom of choice in global partnerships and no country can expect a veto on its ties. He made the remarks in conversation with NDTV Group CEO Rahul Kanwal at the Hindustan Times Leadership Summit. Listen in.
You're trying to further India-Russia ties at a time when the United States would have ideally wanted greater strategic alignment, which now seems very, very difficult. But do you think, given that you're in the final stages, or at least attempting to push through the first tranche of an India-US trade deal, President Putin's very public visit to India complicates negotiations with DC?
No, I disagree with you. I think everybody knows that India has relations with with all the major countries of the world. And I think for any country to expect to have a veto or a say in how we develop our relations with others is not a reasonable proposition. Because remember, the others can expect the same. So I think we've always made it very clear that we have multiple relationships. We have a freedom of choice. We talk about what is called strategic autonomy, and that continues. And I cannot imagine why anybody would have reason to expect the contrary.
Jaishankar talking about strategic autonomy of the country while the tariff talks are on with the US. With that, it's a wrap on Markets at 12. Thanks so much for tuning in, but keep it with NDTV Profit. Thanks so much.
Has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of a weakness in the rupee, and we'd actually look for a reversal back below 90.
$2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long way. You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something.
Hello and welcome to Profit Buzzers. I'm Anushi Vakharia. Before we talk about interesting stories of the day on what's happening with the primary as well as the secondary market, let's take a quick check with regards to what's happening with the markets currently. So in terms of the benchmark indices, if you look at Nifty 50 from the day's low, we are currently seeing those cuts steepening. It's at the day's low is what we are seeing. 0.7% is the kind of a decline that we are seeing for Nifty 50. For if you look, just to take a look at Nifty Bank as well, if you look at what's happening with that regards, it's down about 0.8% from what was 0.4% earlier just 2 hours ago. So we're seeing correction across the board for benchmark indices. In fact, if you pull out the point contribution table, we'll see some of these banking names right at the top. We are looking at SBI here right at the top. Along with that, Interglobe Aviation is something which has continued to face that kind of pressure on account of flight cancellations and what would be the impact on its earnings be. Bharti Airtel and Bharat Electronics are a couple of other counters which are trading in red today. While on the other side, some bit of relief is what we are seeing with regards to HDFC Bank, HCL Technologies, as well as Tech Mahindra. You'll see all of these IT names emerging. In fact, if you just take a check at what's happening with the sectoral heat map, it's the only index which is providing some bit of relief, which is now, in fact, now it has gone down in red as well. Because if you looked at the earlier part of that day, that was in red, but now it's down about 0.14% as well. So we are seeing a sea of red with Nifty Realty taking most of that beating that we are seeing in trade today. Along with that, even Nifty PSU banks are under pressure. But if you just pull out the real estate index and see what's happening there, it's not been a great month, or rather a great year for real estate in particular. We are seeing correction for Godrej Properties, Prestige, DLF. All three of these cuts of over 4% for each of these counters is what we are looking at. Now, coming to the broader markets, however, if we take a check at that, that's also where we are seeing some bit of that pressure. In fact, mid-cap 150 correcting more than 1% in trade today. Even if you take a look at small cap 250, even that is down about almost 2% is what we are looking at the current levels. 1.8% is the kind of correction that we are seeing. Let's take a check at BSE 500 to get a sense on what's happening over there. So Tata Teleservices, Interglobe Aviation and Data Patterns are some bit of stocks which are under pressure. In fact, even the defense pack is not doing so well today in trade. However, there's some bit of stocks which are still doing relatively well despite the overall markets which are on the weaker side that we are looking at. Latent View seeing an uptick of around 7%, Tata Investments and 3M India seeing gains of over 3 to 4% as well. So that's what we are looking in terms of what's happening with the benchmark and the broader market indices. But let's talk about primary markets in more detail. Now, if you just look at 2025, now that turned out to be a record-breaking year for IPOs with 94 companies raising over 1.5 lakh crore. Now, fresh issues, if we see, accounted for 63% of the total that we are seeing, while the rest came through offer for sale. This marks one of the largest OFS amounts ever as well. Jasmeet is here with a sector-wise and performance-wise breakdown of 2025 IPOs. Jasmeet, over to you.
Well, thank you for that. This year has been a lot of things. Nifty hitting all-time high, while we also saw rupee and dollar hitting all-time low. While it has been a year of IPOs as well, we have seen some of the best IPOs performing as well as IPOs which had some pressure. If you look at the year 2025, we have had 94 IPOs so far, raising roughly 1.5 lakh crore in the markets. If you look at the size of the IPOs and what were they heavy based on, OFS heavy IPOs was seen at the large, given that 67% were on the back of OFS, while 37% came on the back of fresh issue. Now, if we look at the performance of the companies, how did they perform in the listing? We see that 64 of them were positive on the listing day, while 30 of them saw a negative reaction when they got listed. But this ratio changes going forward, which we'll get to you. Going ahead and understanding the OFS amount ratio, we see that this year we have raised the highest ever OFS amount in terms of the split compared to fresh issue. We have raised roughly 97 or 1,000 crore in this particular year compared to 23 or 1,000 crore in 2020, while in terms of fresh issue also we have raised as high as 57,000 crore, a bit lower compared to last particular year. But in terms of the mix percentage, we see that we stand on a very mixed stage, given that in 2017 we saw OFS was roughly 83%, but in this particular year the OFS stands at 61%. On the other hand, fresh issue has also increased from 7% up until 39% in this particular year. When we understand the overall report card of IPO of how they have been performing, we have seen that 21 of them out of the 64 which have opened in green have gains over 20% on the listing day. While if you look at the other aspect, those are 4 other IPOs which have gained over 50% on the listing day itself, having a boom in the stock market. While if you look at the negative IPOs, as we see, 30 of them opened in red. Out of those, 6 of them lost more than 10% on the listing day, while the rest, 2 of them lost over 35% on the listing day going forward. While in terms of the performance since listing, as of compared to today, we see 56 of them in red and 38 so far are in green. So we see the split being changed, given that we had 64 roughly opening in green and now the split has changed. While in terms of the best performing IPOs, which were the hits in this particular, we see something like Ather, which is up 129% since the listing, something like Quality Power, Alon Healthcare and EPAC Pref is roughly up about 67% since listing, while in terms of IPOs a flop in the market, which are still tanking in trade. Lakshmi Rental is down 52% since the listing of the IPOs, while Gem Aromatics and then you have Highway Infra, Regal as well as VMS TMT, which is tanking in trade and suffering since the listing. We also have the last segment where we tell about the story, which is a turnaround story of IPOs, which listed on a negative basis but now are trading in positive. Something like an Om Freight, which listed at 35% downtick on the listing day, is currently up 12%. We see an overall improvement in the stock performance. In terms of Quality Power, also was down 9%, but it's again up in trade by 87%. The interesting one would be the Ather one. That's the best performing IPO in this particular year, which started at a 6% lower on the listing day, but currently it's up almost 129 to 100% in trade. So all in all, we're seeing a mixed picture in terms of IPOs when it comes to the performance of the stocks. But though we see the OFS is heavily inclined in this particular year, it'll be interesting to see how the rest of the months pans out, given that this data is up until December 4th of this particular year.
Okay, thank you so much, Jasmeet, for that concrete view in what's happening with the IPO space in 2025. But just to discuss this more in detail, we are joined in by Nipun Lodha, Head Investment Banking of Prabhudas Lilladher. PL Capital is what we are seeing. So first of all, thank you so much, Mr. Lodha, for taking out the time. I'll just start off this by decoding what Jasmeet spoke about in terms of 2025, where we've seen a bunch of issues coming up, and a major criteria that we've seen that others have also highlighted is some bit of valuation concern which is there for the street. Now, if for a retailer he wants to enter with IPOs, what should be the approach be? How do you view the space currently? Let's start off with that.
Thanks for having me on this call. I would say, valuation is a concern, and which is always going to be a concern. Investors have to decide. They have to choose between value and growth. Right, so most of the growth companies are coming with the IPO, right? And I should say most of the quality investors, institutional investors are there in the anchor book. Mutual funds are there in the anchor book. AIFs are there in the anchor book. So the valuation discovery is happening at the anchor level itself. Now, are you looking at a listing pop, or is one looking at holding these stocks for a time of 6 to 24 month horizon? Definitely, one should look at holding these stocks. If at all, one has to consider investing for a longer period of time. Listing pop is one thing which out of 5 IPOs, 2 may give you a listing pop, 3 may not give you a listing pop. So there is a 40-60 ratio towards that. So that's where one has to look at it. Definitely, there is a good pipeline of IPOs going forward, and there's a lot of money sitting with institutional investors who are considering investing in IPOs vis-a-vis block deals or secondary purchases.
So, Mr. Lodha, just want to understand the year gone by. If we have to take all the IPOs which were there, how would you differentiate from the previous years? You know, there's a lot more interest in terms of whether investor appetite is concerned. But what is the kind of strategy that you adopt when you're looking towards these IPOs? Which are some of the key strategies and some of the concerns that should be highlighted when one has to invest in these IPOs that we're looking at?
See, invest in these IPOs, I should say, if you look at growth companies which are, and these are businesses which have been established over the period of last 10 years, one should say that. And most of the companies are now venture backed or family office or AIS backed companies. So if one is to look at investing in these companies, you should look at, ideally, I should say that the management track record, how have they delivered over a period of last 10 years, right? How have they performed, and is there a growth potential going forward? So quality of management is one of the very important perspectives while you consider investing in these IPOs. Second thing, what is the valuation are they offering at, and is this the right valuation? I would say there are mixed reactions and opinions towards it, but yes, if I would have to advise somebody to invest in these IPOs, I would say that if it is a loss-making enterprise, definitely one should consider investing post listing. Definite, and as the record speaks, in the past, most of the companies, out of 60% of the companies, have come below the IPO price. At that time, it makes sense to buy those companies rather than just jumping at the IPO bandwagon and investing into them.
Right. Nipun, if you look at the trend that we are seeing, and this has not been just for 2025, even in the past few years, we have continuously seen that whenever there is an IPO, the amount of OFS is much more than what the fresh issue is. In fact, even this time, nearly 63% of the funds that have been raised is via OFS, and that has been the trend for the past couple of years. So how should one read into that? Should investors or new retail investors, in fact, should even they consider that, given the fact that existing investors are exiting the company at a high valuation, should that be a concern for a retail investor to invest in IPOs?
See, now if you look at OFS, let's break OFS into two parts. OFS by promoters and OFS by investors, right? So when an investor is doing an OFS, he has already been sitting into the company for last 5, 7, 8 years time frame. And investors have a defined life cycle to invest in the company, and they also need to churn their capital going forward. And second thing, if there is a large chunk of a promoter OFS, then definitely it's a cause of concern for anybody to consider investing going forward into that company, and how the founder has shaped himself going forward into the company. Is he really into an executive role? Is he not into an executive role? What is the way forward for them? So OFS is a good sign, I should say that. But who is doing the OFS? Is it a promoter, or are these investors doing the OFS? And are these investors doing OFS? Like, if an investor has come in 2 years back and he's doing 100% OFS, definitely it's a cause of concern. But investor who's sitting in the company for last, I should say that 7, 8 years time frame, definitely it makes sense for them to do part of the share as OFS and continue hold shares going forward for a couple of years time frame. Like you see a case in Physics Wala. None of the investors offered their shares for OFS because they invested around 4, 5 years back, and they see that there's a growth coming in and they're willing to hold it. But at the same time, in Misho, you see there are investors who are doing OFS, but these investors have backed the company for last 10 years. So proportion of OFS between the promoters and the investors, what it is, that is to be looked at more seriously than what is the amount of OFS.
Right. As you were mentioning that there are a few cases where investors have not exited even during IPO, but there are few cases like Grow. It was a stellar listing that we have seen 50% returns so far. But after this 50% move that has come in, there have been a lot of employees who had got these ESOP shares. They are continuously selling. More than 30-40 crore worth of shares have been currently sold into the market once the listing has been done. So how should one look at this aspect? Should retail investors be concerned about employees exiting from the company, or is it quite a normal process given the fact that these employees were allotted ESOPs and now they are cashing into the gains?
should say that everybody likes to encash some certain bit of shares. But yes, if employees are cashing 100%, then there is a concern which should be looked at, and companies should report if any of the KMP is selling their shares as a ESOP shares which have been converted into equity. It should be reported and brought to the light of investors, and investors can take a concerned view about it, that what should be the next step going forward for them. But it is a matter which should be looked at with cautious.
Okay, Nipun, if you just have to decode what's happened this year, about from the 94 companies which got listed, 30 closed in red. But while we did see some bit of that, some of these having a weaker listing day gains or rather loss, if you are looking at, we've seen quite a turnaround for some of them. This includes the likes of Quality Power along with that EPAC Prefab as well, and Aether Energy also, which has seen its stock price in fact doubling this year itself. So any of the IPOs this year which stood out to you where you are bullish on their long-term prospects?
Well, I would not name typically any of the companies which are bullish on the long-term prospects, but where I would come from is that at times what happens, quality companies or good companies, investors do miss out, and because of the weak subscription figures, they do list at in the red. But as they perform and deliver their numbers going forward to the investors, definitely the coverage starts and the actual price discovery happens. So it all depends what is the grey market premium when the IPOs are looked at by various investor classes, right? And that's what decides the listing day performance. But going forward, quarter on quarter result deliveries and the growth plans, what companies position it to the market, that's what decides the market cap of the companies going forward.
Well, thank you so much, Nipun, for joining and sharing that perspective on what we should be looking out for when it comes to investing in primary markets. But it's time that we slip into a short break. We'll be right back. There's lots more lined up, so do stay tuned in.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
...2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
The NDTV Profit has come a long ways. You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit.
Welcome back. You're watching Profit Buzzers on NDTV Profit. With that, let's welcome in our fundamental guest for the show today, Prashant Tapse, Senior VP Research Analyst, Mehta Equities. Prashant, firstly coming to you on Indigo. Now the stock has been continuously falling. In the last 8 trading sessions, the stock is down more than 17%. In fact, the market capitalization of Indigo has fallen below the 2 lakh crore mark, and this is one of the biggest fall that we have seen in the share prices since October 2024. And this is all because of the flight cancellations the company announced over in the last 5 days. However, things are improving, but at this point of time, after this fall, do you think it would be a right time to enter this counter, or should one wait and watch for Indigo?
Studio, no audio.
Right. Let's get in Anushi to discuss the trending stocks that we are seeing in trade today.
So I'll start off with the first one, which is in focus, that's latent view analytics. Now, if you just look at the volumes for this particular counter, that's 9 times up compared to its 30-day average. In fact, just on the recent updates of the company, today we are looking at a strong up move despite the weakness which is there across benchmark indices as well as broader markets as well. So higher volumes is something that we've seen in this counter. But just onto a couple of updates that the company had in its Q2 con call, as well as the recent management change also. FY26 revenue growth guidance was raised to 19 to 20%. However, on the downside, if you see, there was a management change in which the CFO of the company had revised. So that time we did see some bit of that negative reaction for the stock. But today's moves, we are looking at gains of over 7% currently. So that's on latent view that we are seeing.
Right, Prashant, coming to you on latent view. Now, if you look at the second quarter numbers as well, the company had increased their guidance. Revenue guidance had revised it upwards to 19 to 20% from earlier guidance of 18 to 19%. And the EBITDA guidance was around 22 to 23%. It's a strong growth number that the management has given, and the stock is buzzing in trade. How are you looking at latent view as a stock?
I think that was the only reason why stock is trading in the greener zone, because recent times a lot of companies are not able to sustain or give proper guidance to the markets, how their business model is going forward with these market conditions. I think with respect to valuations, with respect to the business model, what latent view is as on date, I think the management can easily have that kind of easy growth of 50 to 20% on the margin improvement as well as on the bottom line. So overall, the guidance of the company has given the market a good push today. So we are very positive on the stock.
The next stock that has been trending today is Tata Teleservices. Now, the company does not have a business as such, but the stock could be gaining largely on the focus, largely behind the AGR news that has been coming in. In fact, the stock is down 8% in trade today. Vodafone Idea was also down. Let's get in Anushi to give us more details on the same.
So while we are looking at this one aspect which is there on related to the AGR news, the other aspect that we are seeing on this negative reaction in trade today is also on the penalties that were imposed, and this is from the Department of Communications in Maharashtra that we are looking at. This includes a 4 crore for alleged non-compliance with subscriber verification norms as well. There has been pressure for this stock in the last 1 month period as well. That's why we are looking some bit of that cautiousness on street for this particular counter.
So for Tata Teleservices, if you look at as a business, there's not much. They used to be in the telecom business at one point of time. Right now, they do not have much of service when it comes to consumer telecom. And NDTV Profit in the morning broke the news that even in case of Vodafone Idea, the government is not considering an entire AGR waiver. So do you think, Prashant, that has does that have a negative rub-off effect on Tata Teleservices as well?
Obviously, yes. I think the uncertainty in the government decision as well as the business model, which doesn't have any clear picture on the profitability going forward. So the business model is so much under pressure or under trouble right now. So the visibility of any profitability is very less for an investors as of now. So any small news creates a lot of big noise for the company. So there is a big negative hurdle still awaiting for Tata Teleservices.
The next stock on the focus is Sterling Wilson and Solar, and the company has hit an intraday low of 6%. What could be potentially the reason behind this? Let's get into Anushi.
So what we are seeing is that there's a 6% of reaction just today's trading session as well. But if we look at the last 6 months also, the stock has not done so well. Particularly, it's down about 31% in fact. Now, if we see what's happening with the company, just on the recent update part of it, now Bombay High Court has passed an order in suit of Axis Bank, and this is with Axis Bank depositing about 61 crore for the case that is ongoing with the company is what we are looking at. But apart from that, the company has also been in focus in back of an order win and agreement as well. Now they've signed a 5-year of a strategic partnership framework with Adani Green Energy, and they've received orders up to 1,381 crore for the same. Now do note that this order is for supply of goods and on-site services for 3 of their solar power projects at Gujarat is what we are seeing. So SW Solar, that's the kind of outlook that we have so far.
Right. Prashant, if you look at Sterling and Wilson, their order book continues to remain strong, around 10,000 odd crore rupees. But despite this, the stock has been always under pressure. How are you looking at this counter, Sterling Wilson, and would you recommend your investors to buy this counter?
We are very much neutral to negative on this sector right now. Solar, because the EPC companies are not able to have good execution power right now. If you see the last quarter also, the numbers are really bad. Historically, they have never made a profit less than 10 crores, but again, they have reported a 4 crore and then they lost on the bottom line. So EPC companies are facing very huge problem right now with respect to executions. As well as solar as a sector, I think there is some kind of concern with respect to the demand and supply. There is a huge demand, but supply is right now is oversupplied. So I think there is some kind of concern in the company, and we are very much negative on EPC sector.
Right. PTC Industries, that counter remains in focus after they signed an agreement with Honeywell Aerospace, and this is yet another large OEM that is coming into PTC Industries as a partner. Let's get in Anushi with more details.
Well, we've seen strong up moves for PTC Industries over this last 3 months period. Now, Goldman Sachs, in fact, came out a note just on the same, wherein they've given it a target price of 24,725, maintaining a buy call in this one. They say that this long-term supply agreement with Honeywell is a positive development for the company, and it complements its existing contracts also, which are already in picture. In fact, they're also projecting an EPS CAGR of around 123%, which is highest amongst the defense companies. This is also on account of the company expanding its manufacturing capabilities in the titanium space also that we are looking at. Antique also came out a note on the same, wherein they have a similar kind of a target price for PTC Industries. That's why the company remains in focus.
Both Antique and Goldman Sachs' target price at least show a strong upside from the current levels. Prashant, what's your view here?
We don't have active coverage, but again, looking at the numbers and the valuations, it's very expensive at this point of time. So we don't recommend that this stock at this point of time because of the valuation concerns.
But then if you look at the growth prospects, it's quite strong. I was just going through one of the notes, and that shows that the company could deliver an EBITDA of close to 2,300 crore rupees in FY30. So that would make the valuations quite cheap. In fact, they are looking at the valuations at around 11 times FY30 EV to EBITDA.
I think yes, considering the current valuation and the execution timeline, which we are considering very concerned for the companies, they have a good visibility for next 3 to 5 years. But again, currently the execution has to be proven. I think we will wait and watch for at least 1 or 2 quarters. So if something there is a good improvement in the margins or on the top line, we may be positive after that.
And lastly, Gabriel India remains on our radar as well. Let's get in Anushya again.
So talking about Gabriel India now, the stock has hit an intraday low of 6% in trade today. There's no fundamental triggers as to what's leading to this kind of a downtick in today's session. But just in terms of recent updates, the company has received approval process for its JV, which is SK Movie, which is expected to be completed by December 31st itself. In fact, if you look at what's happened, for their earlier JV also, they had received a no observation letter as well. In terms of earnings though, if we just take a look at that, revenue had seen about a 14.9% of an uptick, while margins had remained flat, while net profit had seen about a 10% of an uptick. So that's on Gabriel India, on what's happening with this particular counter.
Prashant, have you tracked Gabriel India? Remember, the company once had said that they are looking to enter the lubricant business that was supposed to add around 500 crore rupees to the company's top line over the next 5 years.
Yes, I was tracking this news and then I had a good impact on the stock. But again, right now, I think it's a technical factor. The stock is closing to below 200 DMI. So that can be the one reason why stock has been under pressure today. But overall, I think with respect to earnings, I think it will have